Yes.
What's this? Buy some houses.
Go on. Oscar. Now. So welcome to another video. So I'm going to be explaining exactly why I've set up a limited company for my buy-to-let properties. And I'm also going to explain why you should seriously consider doing the same, providing that you meet the 3 advantages that I'm going to explain in this video. So I'll be covering all the pros and cons involved in setting up a limited company for your properties, and I'm also going to make you aware of a couple of things that you've probably not heard about before. So I'm Jason, and this channel is all about building wealth and increasing your net worth through property and other various passive income streams. So at the time of making this video, I currently own 5 buy-to-let properties, of which 3 of them are in my own personal name and the other 2 are in a limited company. So hopefully I should be able to give you a good insight into both ways of doing it. So why did I decide to set up a limited company for my properties? And the main reason is down to tax. Tax. So the main reasons are down to tax. So up until recently, you could deduct the cost of the interest on your mortgage as an expense. So for example, if you were getting £500 per month in rent and your mortgage interest payment was £200, that will leave you with £300 profit, and you would then pay tax on that £300. However, the government has now changed this, and they're basically squeezing more tax out of people. So what you have to do now is you have to pay tax on the full £500 rental. You can't actually claim back the interest on your mortgage as an expense anymore, or you can't deduct any mortgage payments. Now you are of course still allowed to claim expenses on repairs or legal costs or things like that. So for landlords, this means that you could be paying hundreds of pounds extra in tax every year for each of your properties. And it's certainly been a major contributor for the reason why there are now less landlords, and the reason why a lot of landlords are actually selling up and getting out of the market, because basically all of their profits are being squeezed out by tax. Now, this isn't entirely true, because obviously owning buy-to-let properties is still very profitable if you do it right. However, a lot of people have seen this as a bit of a warning, and they've just decided to get out for that reason. However, if you own your properties within a limited company, then this new tax rule does not apply. So if your rental income is £500 per month and your interest on your mortgage is £200, you can still deduct that £200 as an expense. Now, there are also some disadvantages which we will come to later in this video. So if you're currently a subscriber to my channel, or you've just happened to drop on this video, then I hope you're enjoying the content, and I'd really appreciate it if you could hit the thumbs up button, as that would really help with my channel and the YouTube algorithm. So the second reason that I shifted over to a limited company is again tax, but this time it's to do with income tax. And it's for this very reason that a lot of people opt for a limited company over owning properties in their personal name. Now in the UK, we have what we call income tax brackets. So for the first £12,500 that you earn, you don't pay any tax. And then in between £12,500 and £50,000, you pay 20% tax. And then any earnings over £50,000, you pay 40% tax. Now when you own rental property, the income and profits you make from your properties goes towards your income. And what tends to happen is when you've built up a portfolio of couple of properties or maybe more, it pushes your income over the £50,000 threshold. So then you start paying 40% tax on anything you earn over this amount. So by having properties within a limited company, the profits from those rentals are technically the company's and not yours, and therefore do not go towards your personal income until of course you do decide to take out profits for yourself. Now this was a really important factor for me, because as I already owned an online marketing company, the fact that I was then having properties and adding to my income, it meant that I wasn't able to withdraw as much profit from my current company, because the money I was earning from property was actually contributing towards my income and pushing me over that £50,000 threshold. So for me, it made perfect sense to build my portfolio of properties within a limited company and let that money just build up and compound over time. So I could actually earn an income from property without actually having the income in my own personal name or drawing down a profit, which that means I'm not paying tax on it. And the third biggest factor for me, and for a lot of people as well, comes down to capital gains tax. Now, if I have multiple properties in my name, when the time comes for my children to inherit those houses or pass them down, it's going to be a tedious task, and not to mention all the tax and capital gains that comes with it that my children will have to pay. Now, if a limited company owns the properties, it's much easier for me to just make my children or whoever directors of the company, which gives them ownership of the company, which in turn gives them ownership of the properties. So for me, those are the three biggest factors and the reasons why I personally decided to form a limited company for my properties rather than keep buying them in my own personal name. Now, there are also other advantages, such as you don't pay income tax on any profits that you reinvest into buying other properties. So if you don't take any money out of your company and you just let the profits build up and then use that to buy another house and so on, you're not actually paying any income tax because you're not taking an income. And another good advantage is your personal funds can be drawn back down. And by this, what I mean is, if, for example, you put £25,000 of your own money into this new limited company and then use that to buy a property, when your property has made profits of £25,000 or more, you can then take out that £25,000 completely tax-free. So now we've looked at some of the advantages of setting up a limited company. Let's take a look at some of the disadvantages, because setting up a limited company for your property is not necessarily the right thing to do, and depending on your situation, it's going to determine whether or not it's beneficial for you to keep them in your own name or to set up a company. So the first disadvantage to having a limited company is all of your profits are going to be subject to corporation tax, and at the minute corporation tax is 20%. So all your profits for each year, you'll have to pay 20% corporation tax. Now, it's not really a big disadvantage because you would be paying 20% on your income if they're in your personal name anyway. But as they're in a limited company, you have to pay 20%, but it's corporation tax. However, you should remember that when you do finally draw down your profits from your company to yourself, then you will probably be subject to paying more tax. Now, if you take a dividend, you're allowed to pay yourself up to £5,000 in dividends per year, tax-free. And then once you go above this, you have to pay 7.5% tax on your dividends. So please take that into account when thinking about setting up a limited company. So another disadvantage is the time it takes to set up a limited company and all the hassle and admin of conforming to the government's never-ending needs. Now, you will have to file accounts annually, and I highly recommend that you get an accountant to do that for you, because it can be a pain. Now, next up is when you try and get a mortgage through a limited company, your choice of lenders is limited, and when your choice of lenders is limited, it means that you don't actually get as good of interest rate as you would if you'd have purchased it in your own personal name. Now, I'm hoping this will get better in the next few years when more lenders come on the market, but at present, you will find that you will pay a higher interest rate when you take out a mortgage through a company rather than your personal name. And you'll also find that solicitors' fees are a bit higher too, and I've no idea why, but for some reason, you will pay more for a solicitor if buying through a company rather than yourself. Now, another thing what a lot of people don't talk about is something that you will require, and it's called a deed of guarantee. And this is because although you're buying the property through your company, the lender will still want you to be liable for the mortgage payments. So what you'll have to do is you have to go to a separate solicitor and get them to witness and sign something called a deed of guarantee that basically says that yes, although the company owns a property, you are personally liable for it. Now, obviously this takes up more time, and obviously you have to pay a solicitor to do it. Now, here's another thing. If you're thinking about moving your current buy-to-let properties into a limited company, then you might want to think again, because if you do this, you will have to pay all the stamp duty and legal fees all over again, and this simply isn't viable. So there are the main advantages and disadvantages of holding your properties in a limited company. So the question is now, is it a viable option for you? Well, here's my take on it. If you own one buy-to-let property, or you only plan on owning one or two properties, then I would say that having them in your own personal name is probably a better option. Now, if your income is over the £50,000 tax bracket, or you're very close to it, then I would highly suggest that you set them up within a limited company. Now, if you plan on building a portfolio of properties, then I would definitely recommend you go down the limited company route, because that's exactly what I'm doing, and I know that I already have 3 in my own personal name, and I wish that I could have set them up in a limited company, but at that time that wasn't a viable option, and there were no lenders actually really lending to limited companies, and my knowledge of it wasn't really up to scratch. So hopefully for you, you now have the knowledge to know whether or not it's better for you to set up a limited company for your properties, and whatever you decide to do in the future, you're going to have to make a decision now based on what kind of size portfolio you want to build or how many properties you want to own. So I hope you enjoyed the video, and I hope it's made you more aware of what's involved with properties and limited companies, and hope it's made you have a think about the decisions you're going to make. And if you did like the video, please hit the thumbs up button, and also please let us know your thoughts and situation regarding property, and if you have any questions, please leave them in the comments below, and I'll try my best to answer them, and I'll catch you soon.